senator from Louisiana.
Thank you, Mr. President. I rise today, Mr. President, to discuss my bill, the Reforming Finance for Local Economies Act that I introduced earlier this week. This bill is very simple and straightforward. It would exempt community banks and credit unions with assets of less than $10 million from complying with the loan-killing anti-jobs disaster that we commonly refer to as Dodd-Frank. Every reasonable person, Mr. President, with a passing knowledge of our banking system knows the destabilizing effect that Dodd-Frank has had on local economies, community banks, and the nation's credit unions. Just last week, President Trump turned to the problems wrought by Dodd-Frank by signing 2 presidential memorandums to take a look at orderly liquidation authority and the systemic risk designation process at the Financial Stability Oversight Council. And I applaud the President's efforts in that regard. I believe, Mr. President, they are desperately needed. Reforming this flawed law is crucial to the future success of the American economy. Some of my colleagues were here, Mr. President, when Dodd-Frank was passed in 2010. As we all know, it was intended to prevent another 2008-like banking crisis by strengthening federal government regulation of financial services. But in the process, as so often happens, in the process, Congress actually crippled America's smaller community banks and credit unions that played absolutely no role, none, zero, nada, no role in instigating the 2008 meltdown. And that's not just my opinion, Mr. President. Our Federal Reserve Chair, Dr. Janet Yellen, appeared before the Senate Banking Committee earlier this year, actually on February the 14th. When it was my turn to ask her questions, I asked her the following simple question, quote, "What did community banks do wrong in 2008? What did community banks do wrong in 2008? And this was the chairwoman's answer. Quote, "Well, community banks were not the reason for the financial crisis. It was larger institutions that took risks and risks that developed outside the banking system." Let me read that first sentence again. Chair Yellen, "Well, community banks were not the reason for the financial crisis." And I believe she is right, Mr. President. The fact is that our smaller banks and our credit unions are smothering under the weight of Dodd-Frank. Let me see that other graph there, John. I'll give you an example of what I'm talking about, Mr. President. The Truth in Lending Act, of which we're all aware, passed by Congress, is actually 22 pages long. The Federal Reserve Act, setting up our Federal Reserve System, is 32 pages long. Glass-Steagall, about which we've heard a great deal, was 37 pages long. Dodd-Frank is a breathtaking 2,300 pages with 22,000 pages of regulations. You can stand on the thing and paint the ceiling. And that's why so many community banks no longer exist, Mr. President. And those that have managed to survive have seen their costs go up, their profits go down, and their ability to make small business and consumer loans curtailed, all as a result of the unnecessary heavy hand of government. In fact, since Dodd-Frank was passed in 2010, this country has lost 1,700 small institutions. The reason's very simple. Dodd-Frank has forced community banks and credit unions to either merge, to consolidate, or to go out of business because of the heavy hand of regulation and because they can't make the loans that they normally would be able to make. We have been losing an average of one community bank or credit union a day, nationwide, every single day, since Dodd-Frank was passed because of its cost, which has driven our banks to sell or merge with larger banks. And it is so ironic, Mr. President, this forced consolidation, forcing our smaller banks and credit unions to either merge with or be bought out by larger institutions, has caused even greater concentration of assets on the books of even larger, in some cases, two failed banks that Dodd-Frank was supposed to do something about. My legislation, Mr. President, will help 5,785 American credit unions. It will help 5,461 community banks in our country survive. Specifically, financial institutions with assets of less than $10 billion. If you're a financial institution and you have less than $10 billion in assets, you will be exempt completely from Dodd-Frank. It's 2,300 pages and it's 22,000 pages of regulations. We're talking about a lot of banks, Mr. President. Banks with less than $10 billion in assets make up 92% of our nation's banks, according to the FDIC. Banks with less than $10 billion in assets provide 48% of all small business loans, 16% of residential mortgages, 44% of lending to purchase farmland, 43% of lending for farm operations, and 35% of commercial real estate loans. If my bill passes, Mr. President, these institutions will no longer have to reduce their products and service offerings in order to divert resources to compliance, to interpretation, and to execution. The expertise of our smaller banks and credit unions in America in evaluating risk will no longer be reduced to some algorithm, some mathematical exercise. Instead, our institutions will be able to deliver desperately needed capital to the customers they know so well, because that's what community banks and credit unions do, Mr. President. They take in local deposits and they make loans to local borrowers that they know and whose creditworthiness they can closely monitor. Because community bankers, as we all know, are relationship bankers. They don't participate in widespread subprime lending. They don't use derivatives to speculate, and they never did. Most of them have fewer than 100 employees. The type of regulation they need, and I'm not suggesting they don't need regulation, Mr. President. What I am suggesting is the type of regulation they need because of the risks that our smaller institutions take is much different than the regulation needed by a $700 billion or $1 trillion bank. Now, I am certain that the proponents of Dodd-Frank were well-intentioned when they wrote and passed it. But 150 years ago, Mr. President, doctors used to bleed their patients with the best of intentions. They stopped doing that because their patients died. And that's why I suggest today that we eliminate Dodd-Frank for our smaller institutions. Making Dodd-Frank applicable to community banks and credit unions is a lot like using a sledgehammer to go after a gnat. It is way over the top. Now, certainly, our smaller institutions need regulation. Certainly, they need regulation to ensure that they're stable and secure. Our small institutions know that. They know they need it. They want it. They welcome it. But even after my bill becomes law, community banks are still going to be subject to a strict regulatory scheme established by dozens of applicable federal statutes. I'm talking about the Banking Secrecy Act, the Electronic Fund Transfer Act, the Truth in Lending Act, the Equal Credit Opportunity Act, and I could go on and on and on. All of these statutes will still apply to our smaller banks and credit unions. Our smaller banks and credit unions, now exempt if my bill passes from Dodd-Frank, will still be under the supervision of the Federal Reserve. They will still be under the supervision of the Comptroller of the Currency. They'll still be regulated by the Federal Deposit Insurance Corporation and the National Credit Union Administration and even the Department of Justice. Mr. President, America's smaller lending institutions need some relief. And what they need is relief from the destabilizing consequences of Dodd-Frank. The Reforming Finance for Local Economies Act, in my estimation, is a step in that direction. I'd also like to say in closing that I'm pleased that both President Trump and Senate Republicans are committed, as we are, to paving the way for new businesses and the jobs they create through regulatory reform, as our actions have already been proven this year. However, I'd also like to stress, Mr. President, that helping our community banks and credit unions is a bipartisan issue, and one that I hope will garner support from many of my colleagues, not only on the Republican side of the aisle, but my friends on the Democratic side of the aisle. I welcome their support. I look forward to working with my fellow members on the Banking Committee to find some common sense solutions that will help grow our local economies. With that, Mr. President, I yield the floor, and I suggest the absence of a quorum. I yield to Senator Cassidy.